Hi, welcome to the budgeting and budgetary control. So this is model number 5 in cost and management accounting. So before we begin with this particular module, this module is very much applicable in the present scenario wherein most of the companies are facing with a lot of problems because of the lockdown and what is the budget they have prepared for this particular period. Now they need to again rethink on that particular budget that they have prepared, so given the situation of a lockdown. So before we understand the basics of budgeting and budgetary control, so what are the content of this particular module? So this module is going to cover the meaning, the features of budget, the meaning of budgeting, meaning and objectives of budgetary control, types of budget, cash budget, flexible budget. Then we also understand what is known as zero based budgeting. So let's understand a bit introductory part of this topic. So as we know, there are among the different management functions like planning, directing and motivating, controlling. So the one of the main important functions among the three happens to be the control functions, because we may do a best planning, we may also have best people to execute the plans. There will be a set of people who are highly motivated to take up the what are the planned activities are there. But having done all these things, so if it doesn't control the activity, then we'll be not knowing whether the things are moving as per a plan or no. So in this regard, when it comes to the companies as such, budgets are going to be useful in controlling operations. So this, by doing so, the companies can very well compare the actual results with the planned objectives to understand whether the objective has been achieved or is any kind of a deviation. So from that perspectives, so companies will be preparing a budgets in order to understand what all things that they're supposed to achieve in a given period of time, and after the event gets over or after the particular period gets over, they try to compare and find out are there any significant deviations, if so how to correct them. So the question is, why budget? So as the statement goes, if you know where you are going, you are more likely to get there. It means if I know, like, for the next 3 months time, what is my expected source of income that we are going to generate from the business activities, and what are the various spending that the company is supposed to do. So this will help us to understand, are there going to be some surplus cash left, or is there going to be some deficit. Accordingly they can make proper arrangement for that. Similarly, in case if it is a kind of a production budget, you will be also understanding in terms of how much, at what level of activity is supposed to do the production as such. Whether presently we are into 60% capacity, in case if for the next month, if it is going to be a seasonal month, and in case if we increase from 60% capacity to 80% capacity, what is the amount of resources that are required, and how it is going to affect the production as such. So a budget will help us to plan our activities in a proper manner, and it also help us to perform those activities. Then it will also help to evaluate whether what has been budgeted or whatever has been planned, it was implemented in a way it is required, and finally to report the deviations. So the concept of budget, as the word budget, it's taken from the French word which is called as a Bogeti, which means it's a list of all the planned expenses and revenue. So before we go for preparing a budget, we first try to understand, try to forecast in terms of what all things that are supposed to take place. Then proper discussion, proper planning is going to be done. Then once these activities are completed, then we go for putting all those discussions and plans into some quantifiable terms. So it's a list of all the planned expenses and revenues. It's a plan for savings and spending. So which means when you speak about a particular budget, that's called a cash budget, so it will tell us in terms of how much we will be saving in a particular period, and accordingly what is the amount that is available for in terms of spendings. A budget is simply a financial plan. So because we need to put up all the discussions or all the activities in terms of a numerical figures, so hence it is to be expressed in terms of monetary value, so it is called as a financial plan. So when you look from the different categories of budgets, like a household budget, a firm's budget and government budget, each of these different categories, they also be preparing a budget And accordingly, if you look at household budget, so in the household budget we try to normally look into what are the different sources of income and how this income need to be spent on various household items. So as a layman, so he try to understand whether it's a sources of income, maybe in the form of salary or rental incomes, or from any other kind of interest component that he is going to receive in different time intervals, and how that particular amount is going to be utilized for various household items. So normally these household budgets are going to be prepared by the salaried class people who will be drawing some definite source of income on a monthly basis. Whereas if you look from the point of firm's budget, the firm budget shows the details of sources of funds and how this funds is going to be spent on material, labor and capital goods. So normally firm's budget will speaks about what is the amount of cash sales the firm is going to generate, on account of collection from the credit sales how much it is going to get, then are there any kind of capital assets which the firm is going to sell in a particular period from which the money is going to be raised, or is the company is planning to raise some amount of funding by issue of either the shares or through issuing debentures. So it is going to completely speaks about the sources of funds, how the company is going to raise from different activities, and how this money which is raised is going to be spent. So that is going to be the form of firm's budget. Similarly, if you look from the government budget, there is a state government or the central government. So government budget also indicates what are different sources through which the government is going to get the income, and how this money is going to be utilized for allocation to different social welfare activities, for defense activities, and for various agricultural activities. So the meaning of budget is simple. It's a plan which is expressed in terms of definite numbers. So because we need to understand what is the difference between a plan and a budget. So if you just take an example of a plan, so we say in case if the production manager says a production has to be increased in the next quarter, so this becomes just a kind of a statement wherein he is planning that compared to the last quarter, the next quarter the production has to be increased. So but if the same thing, if it is put up in the form of some quantifiable figures, so that becomes a budget. For example, the production has to improve by 10,000 units from the last quarter to the next quarter. So here in case if the last quarter the production was around 50,000 units, and if the production manager says the production has to increase by another 10,000 units in the next quarter, which means he is clearly specifying what is the increase in the number of units in the next month. And for this increase in the number of units in the next month, what are the resources required, that becomes a part of your budget. So the definition of budget says a budget is defined as a plan quantified in monetary terms, prepared and approved prior to the definite period of time, usually showing planned income to be generated and or expenditure to be incurred during that period, and the capital to be employed to attain a given objectives. So in this particular definition, if we will just put slightly a glance, it tells us it's a plan which is quantified in monetary terms. So as I mentioned, anything that we would like to accomplish our objective in a given period of time, so that need to be quantified in monetary terms, and having just quantified in monetary terms, it need to be approved prior to the definite period of time, we say. For example, if I am preparing a budget for the next 3 months time, having put up what all things I am going to spend and I am going to receive, so this particular budget need to be approved by the sanctioning authorities, and in that particular budget we will be showcasing all the income that we are going to generate and the expenditure that we are going to spend. And in case if there is any kind of capital expenditure that we are supposed to be incurring, so that also will be specifying in that particular budget. At the same time, if you are planning to raise some capital during that particular period, even that also is going to be specified in that particular budget. So this particular budget is going to act as a controlling tool in the hands of a management, because management also will be clear in a given period of time, like whether it is the next 3 months time or the next month 6 months time, what is that the organization is planning to do, and hence how they need to keep a track of all those activities. So some of the essential features of the budget from based on that particular definition. So if you look into, it's a planned budget is related to the planned events. This is prepared for a shorter period of time. and doing this we are going to have some target fixed. So this particular budget is based on this is a result of planning process. Then the process of budget starts where the forecast ends. So once what is the time period, we have kept a 3 months forecasting, having done a lot of discussion. Once that forecasting, we say we are ending a forecasting period, then we should now quantify everything in the form of budgets. Budget is prepared for a business as a whole. Sometimes it may be based on some functional budgets, or sometimes maybe for entire what you call the business as such. So from the management perspective, it is going to be a master budget, but for each functional department we can have separate budgets. The purpose of budget is not merely a planning device but also controlling tool. So it is prepared, it is a predetermined statement to attain a given objectives. So what is the objective that we want to achieve in a given period of time? If that is made more clear in the form of preparation of a budget, so it is going to be helpful. So having said the budget is been prepared, then next question is, what is this budgeting? So mere preparing a budget and filing it in a file is not going to serve the purpose. So whatever the budget has been prepared and got approved, now it need to be put into action. So budgeting is all about, it's a process of resource allocation. So it's a formulation of plan for a given future period in the numerical terms, which means at in which particular period what amount of resource need to be allocated, so how it need to be executed, everything is going to be done through budgeting process. It is more of a process of preparation, implementation and operation of a budget. So once a budget is being prepared, in the budget we'll be mentioning in terms of what activities has to be done in what particular period. Accordingly, the budgeting take care of a systematic implementation of all those things which are put forth in the budget. Hence, budgeting is also applied to any kind of revenue generating entities as such. Now comes the next question. When budget is there, when budgeting is a process of resource allocation, then comes what is this budgetary control. The budgetary control is a process of establishment of budgets relating to various activities and comparing the budgeted figures with the actual performance for arriving at deviations, if any. So one of the important activities in the management functions activities is about controlling, and hence the budgetary control is going to do the task of comparing what was set in the budget, what actually has been taken place, and then finding out is there any deviations. So if the deviation is acceptable, it's within the range, then no severe steps or no major actions are going to be taken up. But in case of the deviation is too much, more than the acceptable limit, then proper investigation is going to be done to understand the reasons for those major deviations. So accordingly, there cannot be a budgetary control without a budget. So having prepared a budget, then the budgetary control comes into picture. So it's something like, for example, if once a railway timetable has been prepared, sorry, once a railway timetable is prepared for the various trains to operate, then it's a duty of the traffic controller to see whether those trains are come at that particular time, and if there's any deviation, he can report those things. So without the train schedule being prepared, it is practically difficult for the traffic controller to cross-check between what was scheduled and what actually has happened. Similarly, without budget, there is no point in doing any budgetary control activities. So budgetary control is a kind of a system which uses budget as a means for planning and controlling. So the Brown and Howard defines this budgetary control as a system of controlling the cost, which includes the preparation of budgets, coordinating the department and establishing responsibilities, comparing actual performance with budgeted, and acting upon the results to achieve maximum profitability. So a comprehensive meaning of budgetary control has been covered in this definition, wherein it is a system of controlling the cost. So why we prepare a budget is, the main objective of preparing budget is to control the cost. So when you want to control the cost, doesn't mean we want to cut down the cost. So how we are going to control the cost? So by preparing a budget and ensuring that for which are the department which was supposed to be interested with this particular activities, and whether these departments are going to do those activities when they're given allocated resources, and in case if there is any kind of variations, we try to understand that variations, and if everything goes as per the pre-assigned task, then the overall objectives of the firm, that is maximizing profitability, it is going to be achieved. So in a nutshell, if you look into the three terms, budget, budgeting and budgetary control, a budget is a blueprint of a plan expressed in quantitative terms, whereas budgeting is a technique for formulating the budget, whereas budgetary control refers to the principles, procedures and practices of achieving the given objectives through budget. So in this way, the budget, budgeting and budgetary controls are all interrelated. So let's move on to understand what are the objectives of this budgetary control. So having known like what are the what do you call the organizational objectives need to be achieved, that need to be achieved through formulation of the budgets. So what is the objective of the budgetary control? So to ensure the planning for future by setting up various budgets. So what are the various budgets normally we come across? Again, it may be functional budgets, it may be based on the different department like HR budgets, production budgets or sales budget, or it may be depending upon the time constraint, whether it's long-term budget or short-term budgets. So depends as to what kind of budget you want to set for. So budgetary control is objective is to ensure planning for future by setting up the various budgets. The requirements and expected performance of the enterprise are anticipated. Next, to coordinate the activities of different departments. So just mere preparing a budget will not going to achieve the objectives. So you need to coordinate with different departments in terms of achieving the broader objectives. To operate various cost centers and departments with efficiency and economy, elimination of waste and increase in profitability, anticipate the capital expenditures for futures, centralize the control systems, corrections of the deviation from the established standards, and finally fixation of responsibilities of various individuals in the organizations. So by doing so, the firm can ensure what are the objectives have been set, so those things are going to be achieved with the proper budgetary control in place. Some of the different structures in which the budgetary control activities take place, you can just have a look here. So on the here we are understanding the different set of reports. So these reports are generated at different time intervals. The purpose of these reports are going to be differing, and the people who are concerned who require these kind of reports are also different. So let's understand the first one, sales report. So sales happens to be one of the revenue generating activity, and when these reports are generated on a weekly basis, so this report is going to determine whether the sales goals have been met, and with the help of these reports, the top management and the sales managers are going to understand, so if the weekly sales, if the firm is able to achieve, then whether they'll be achieving the final objectives, that is final a monthly budget or monthly sales target or the quarterly sales targets, and if that is going to be achieved, then obviously the profitability for that particular quarter is going to be enhanced. Next, the labor report. So the labor report basically again when it is generated on a weekly basis, so this report is going to tell us in terms of so this report is going to basically tell us in terms of the various costs that are incurred on the labors. So and this is going to be used by the different production department managers in order to understand whether they are incurring significant amount of labor cost, whether it may be direct labor cost or indirect labor cost, and what kind of measures they are supposed to undertake to control on this cost. So if you look from the COVID-19 perspective, now most of the companies are looking for this kind of cost cutting measures. So in case of companies where the labor cost is going to be high, can they think of any contract laborers whom they hire to leave them off during this particular period, and accordingly can they control on the spendings on the labor cost. Scrap reports are going to be generated on a daily basis because the production will be happening on day-to-day basis. So this report will help the production managers to understand how the materials are used in efficient manner or not. Like this, departmental overheads, selling expense reports, income statement reports. So there are different set of reports which are basically used by different participants, where the objective of using that report is going to differ. Through this, they try to control the activities. So let's move on to the next part. So until now, I hope we are clear with the discussions. So let's move on to the next. Small technical error is happening.